The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Combat operations continue at this time in full force, and they will continue until all of our objectives are achieved. We have very strong objectives.
The U.S. and Israeli military assault on Iran intensifies overnight, and Tehran steps up its retaliation across the Middle East, targeting U.S. and U.K. bases. President Trump saying American attacks could continue for weeks.
Oil prices spike as global supplies through the Strait of Hormuz come under threat, with hundreds of ships dropping anchor.
Futures point to selling at the European Open as investors weigh the latest developments in the Middle East, with the tech-heavy Nasdaq seen leading declines on Wall Street later today.
U.S. President Donald Trump told the New York Times that Washington intends to sustain its military campaign against Iran for 4 to 5 weeks, if necessary, following the weekend's joint airstrikes with Israel, which killed Iran's supreme leader, Ayatollah Ali Khamenei. The U.S. president also told CNBC's Joe Kernan that operations are ahead of schedule. Overnight, Israel launched fresh airstrikes against Tehran, whilst also targeting Hezbollah in Lebanon. In a pre-recorded address posted to Truth Social yesterday, Trump said operations will continue until Washington has met all of its objectives.
Over the past 36 hours, the United States and its partners have launched Operation Epic Fury, one of the largest, most complex, most overwhelming military offensives the world has ever seen. Nobody's seen anything like it. We have hit hundreds of targets in Iran, including Revolutionary Guard facilities, Iranian air defense systems. Just now it was announced that we knocked out 9 ships plus their naval building, all in a matter of literally minutes. Iran's formerly supreme leader, Ayatollah Khamenei, is dead. This wretched and vile man had the blood of hundreds and even thousands of Americans on his hands and was responsible for the slaughter of countless thousands of innocent people all across many countries. Combat operations continue at this time in full force, and they will continue until all of our objectives are achieved. We have very strong objectives.
Iran's security chief has said Tehran will not negotiate with Washington, blaming U.S. President Donald Trump for chaos in the region. Trump had previously told The Atlantic magazine that Iran's leaders wanted to talk and that he had agreed to do so. Karen.
Well, Steve, we are chasing market reaction this morning, and front and centre the oil price. What we've seen has been fairly strong moves in the price of oil already. WTI is spiking more than 8%. 8.8% on Brent. Earlier, we did see Brent futures soaring by about 13.5% before we've come back to an extent. The big concern is just how long this war presses on for, what the disruption could be of shipments of oil and refined product through the Strait of Hormuz. We've had in the headlines, we mentioned about ships dropping anchor. So there are concerns about that shipment of product. And so far, we've spiked. One of the concerns, what level we get to, if there is some duration to this war, whether it's $90 one handle. Some oil insiders actually saying even $120 in the absolute worst case scenario. So we'll be discussing that more during this show. But these are the immediate reactions you're seeing on oil prices. Gold, don't forget, come Friday session, we'd already marked higher on the gold price for the trade for 2026. So a lot of geopolitical risk already baked into bullion, but you can see this morning, even with the escalation now, we're rising another near on 3%, 5403 on the precious metal. Well, how European markets react is the big question this morning, as well as we price in those oil moves, concerns that we could be talking about more inflation, supply chain disruptions and what that could mean ultimately for economic policy too in Europe. You can see risk off is the tone in the face of further uncertainty. We're looking at a downbeat market this morning, and those big cap stocks in particular, the Stoxx 50, 2.3% on the back foot. FTSE futures, this has been one more resilient part of the market thanks to the oil price. But even there, as you can see, the UK stock market called lower this morning, and DAX futures in particular, big open economy as we talk about industrials and any impact of higher inflation and energy prices that will impact German stocks, as you can see, called lower by more than 2%. Well, to the Asian markets and Japanese stocks in particular, that's where we see the threat of some of those high energy prices catching up. And you can see stocks in Japan trading down by more than 1.3% for the Tokyo market today. Hong Kong as well, 2.2%. Keep in mind, before today, one of the big fears percolating markets had been this fear of obsolescence, the valuation of AI stocks, whether there is any impact there at all on the build out as we talk about some of the risks now in the Middle East and this escalating tension that we're seeing beyond borders. So the market out of the Chinese stock market that is actually more resilient today. We're seeing green there. It's up 0.4%. Australian stocks are holding fairly flat. One area where we're seeing some of the concerns expressed today has been in airline stocks, and Asia showing us what that could look like for Europe as well this morning. Singapore Airlines down 4.6%. You've got ANA Holdings, Cathay all reversing along with Qantas Airways. And don't forget, there have been disruptions through the Middle East in terms of some of those flights. And what we're seeing on the dollar, the consequence here of the risk-off moves has been to embolden dollar prospects. And that has been seen in euro dollar this morning, 0.75% to the downside. Sterling dollar reversing even more than that, dropping more than 0.8. So dollar yen prices we're seeing moving higher as well. And so dollar is the firmer trade right across the board this morning, and including against the Swissy. US futures, let's just take stock of what's in store today and how we may be setting up for that US session. We are expecting the market to pull down by more than 1% across the board. So US stocks look like they will be hit when they open up this morning. But again, somewhat contained as we talk about a lot of unknowns still around the Middle East situation, Ben.
The US, alongside a group of Middle Eastern countries, have issued a warning to Iran, condemning its drone and missile strikes and vowing self-defense. Dan joins us with the latest. Dan, what can you tell us?
Well, Ben, the U.S.-Israel conflict with Iran has now entered its third day. This is an historic moment in the Middle East. And of course, we are already seeing the assets market responding. Oil prices sharply higher, both U.S. crude and Brent rising more than 8% before trimming some earlier gains. And investors also, of course, weighing the supply risk right now as well, given the situation in the Strait of Hormuz. Interestingly, as Karen was mentioning, safe haven gold also moving higher, U.S. equity futures and Asian equity markets declining broadly. And all of this as investors attempt to navigate what is a series of conflicting and a confluence of headlines here coming out of the region at the weekend. We saw Iran launching hundreds of drones and missiles across the region, targeting US bases and critical infrastructure in several Gulf states, including here in the UAE. And in a sign of unity, the GCC countries have come together to condemn what they've called these treacherous Iranian attacks. At the same time as well, Israel's military also actively intercepting incoming missiles today, while also striking Hezbollah targets inside Lebanon. Now, those strikes in southern Lebanon, we understand, have reportedly killed 31 Lebanese citizens and injured 149 others. That's according to Lebanon's health ministry, which was out with some preliminary numbers just a few moments ago. The ministry also warning that those numbers are preliminary and could grow. At the same time, across the Gulf, these attacks that we saw at the weekend have been targeting shipping and infrastructure near the Strait of Hormuz. This is what energy traders are watching right now because it handles about a fifth of global oil supply. We've already seen tanker operators taking precautions here, some shipping companies reportedly avoiding that narrow waterway out of caution, and also insurance costs here for vessels in the region also expected to rise because of the situation on the ground right now. So far, there have been no confirmed sustained attacks on energy infrastructure, but analysts say the key strategy from Tehran may actually be to create uncertainty around the safety of shipping and energy infrastructure in the region, and that uncertainty alone can have a major impact on energy markets. Of course, we've also spoken with other analysts today who say that if this conflict remains limited, oil prices might stabilize further from here after that initial spike that we saw at the open of Asia trade. But of course, in a worst case scenario, we could also see a prolonged disruption to shipping through the Strait of Hormuz, and that could push crude much, much higher from here. In fact, some analysts say a sustained conflict would put 100 USD oil back into play. So right now we have those oil markets both up by around 9 and 8%, and Brent here about to test $80 a barrel.
Dan, first of all, I want to say what great coverage you've been committed to all over the weekend. I've seen you on various platforms, so thank you very much indeed for working so hard amidst very trying conditions over the weekend. Secondly, there are two fears, and you've kind of gone through them both as well. One is the longer-term fear about hits to energy infrastructure, both in Iran and indeed in the GCC nations elsewhere as well. And two, the shutting down of the Straits of Hormuz. But despite all of those fears, I would actually argue that it's actually quite a moderate reaction on the price of oil today. Again, you mentioned $100 a barrel. Many people have said to me on Saturday and Sunday, we think it's going to go straight to $100. It hasn't done that as well. But so which is the bigger fear here, really? That Iran can shut down the Strait of Hormuz because there are questions about whether it can do that, or B, that infrastructure hit, which people, especially in Saudi Arabia, are so worried about?
Indeed, and we're already seeing talk at the moment about the potential for strikes on regional energy infrastructure. You'll recall, Steve, during the Abqaiq attack, the percentage gain for oil was much stronger than what we saw at the start of the Asia trading day this morning. And that really signals to us that markets are more focused on potential disruptions to supply than they are to what is at the moment really a hypothetical scenario where we could see a buildup of ships unable to pass through the Strait of Hormuz. So the most immediate catalyst for the price of oil right now is whether or not we will see the Iranians attempting to target energy infrastructure across the region. And again, it all comes back to barrels, 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 the actual impact on supply, not the hypothetical. I'll add another layer here, and I think we can also say that the OPEC move over the weekend to add more barrels back into the market starting next month is also helping to calm what would have been a much higher price upside here. We saw OPEC's group of 8 committing to add another 200,000 plus barrels into the market, and that additional supply has helped to absorb what could have potentially been a supply disruption as well. So they are two stabilizing factors here, but of course markets remaining on edge, watching and waiting to see which direction this conflict goes.
Thank you, Dan, and stay safe, and we'll speak to you a little bit later on. Let's get to Torbjorn Solvedt, who is Principal Middle East Analyst at Verisk Maplecroft. Torbjorn, thank you very much indeed for joining us. I've seen a lot of very critical editorials, most of them coming out of the United States over the weekend, that said that they're very concerned that the US doesn't have a plan beyond the decapitation of this regime as well. Take out the leaders, and then what? Do you believe there is a plan for what happens next from the United States for Iran?
I think at this stage that it's very hard to say. I mean, what we know so far is that we've had a very frantic pace of events. Even just on the very first day of U.S. and Israeli military operation, we of course had the killing of Supreme Leader Ali Khamenei, someone who had been in power for almost 4 decades. And what we've seen since then, of course, is that Iran has very much tried to put a significant economic cost on the U.S. and Israel. And the global economy more broadly, essentially by putting things like U.S. security partners, global trade routes, tankers, and even potentially regional energy infrastructure in the crosshairs. So a very, very difficult environment for global markets and for regional leaders to respond to with this kind of rapid flow of information coming out from the Persian Gulf so far.
One of the big questions for the markets today is how long any crisis in the Middle East could go on for. If there's a quick resolution, the markets, economies quickly regroup and take out some of the inflation supply chain risk that they're watching today, the energy story, or if it can persist for much, much longer. And what does it mean if we see civil unrest and some descent into instability in the Middle East? How do you price those various different risks today?
Yeah, it's extremely difficult to try and price all of these different risks. We've had talk about potentially 4 to 5 weeks of operation. That is a long time for the market to be dealing with things like disrupted flow through the Strait of Hormuz. We've already seen that in terms of insurance. There's a complete repricing going on. War risk premiums are spiking. Insurance is being withdrawn in some cases. Then you have, of course, you have all of the regional states, the Gulf states. We've seen Iranian retaliation against in infrastructure like hotels, ports, airports, industrial zones. Markets in the UAE are closed today and tomorrow. That's probably quite a wise decision while the situation is as volatile as it is. But if we are talking about an operation that goes on much beyond that, then it's a very difficult situation for markets to respond to.
Torbjorn, it's Ben here joining the conversation. There's been a lot of focus on the Strait of Hormuz, and rightly so. But I think another element that could easily be overlooked is what's happening with the Suez Canal. Given a third of global container shipping goes through there, and we're hearing that some cargo companies are ceasing to use that route. We saw prices for container shipping go up 4 to 5 times the last time there was disruption there. How much of an effect could that have on the global economy?
It's another big concern. And of course, what we had seen just in the weeks running up to this most recent conflict was that traffic was starting not quite to go back to normal levels through the Red Sea and through the Suez Canal, but there were even some of the large container ships were starting to move through the Red Sea again, with the Houthis at least pausing some of their attacks against shipping. Now we've heard, of course, that the Houthis are resuming their attacks against shipping, and now we're seeing just throughout the entire region, the Red Sea, the Gulf of Oman, the Persian Gulf, of course, the Strait of Hormuz itself. All of these areas are kind of effectively viewed as active war zones, which again, as we've talked about, has huge implications for insurance. And what we saw with the Houthis, one of the interesting lessons from that was that the Houthis didn't have to completely blockade the Bab el-Mandeb Strait. All they had to do was present enough of a credible threat to shipping to make it prohibitive for ships to take that route. And that is certainly the case now in the Red Sea, and increasingly also the case in the Persian Gulf. So really, the key question in all of this is really, how quickly can the US and Israel, start to suppress Iranian retaliation, as long as there's ballistic missiles and drones flying around, confirmed attacks against tankers, confirmed attacks against civilian energy infrastructure. All of this is going to remain a big concern for shipping companies, for insurers, and for the global economy more broadly.
Torbjorn, what kind of Iran do you think will actually come out of this as well? Your early thoughts. You've covered the region for a very long time as well, because obviously the US is looking for some form of regime change here as well, looking for an uprising as well. But given the strength of the theocracy, given the strength of the Revolutionary Guard, given the strength of the infrastructure the regime has put in place over the last 6 decades, very difficult to see how some form of liberal democratic revolution could happen. But what do you believe?
Yeah, it's a very difficult question at the moment, and what we're seeing now in terms of Iran's preparation for this conflict, obviously would have been contingency planning in the event of the death of the supreme leader. That has happened. What we saw, of course, was a large section of the military and the political leadership that has now been killed. So in terms of contingency planning, if there is planning for this type of scenario, we're moving down not kind of option A or B or C. We're much further down that list, and we've already seen potentially some concerns over command and control. We saw that Iran's foreign minister said that in terms of the attacks against Oman, that wasn't a political decision. That was units of the Iranian military acting independently. So already we're starting to see some concerns about the ability of Iran to function as normal in the middle of this conflict. In terms of succession, succession would have been planned for more normal circumstances, not in the middle of a war like this when the leadership is wiped out in one fell swoop. So in terms of what comes next, it's probably too early to be turning to that. We're still seeing kind of active conflict. For now, any kind of semblance of survival for what is left of Iran's political and military leadership would be a success. On the other side, for the US side, in terms of the objectives of the military force that has been employed, it's less clear. what kind of a victory will look like from the US and Israel. They've achieved some initial sort of tactical success, whereas for the Iranians and the Iranian authorities, it's much clearer. Survival is what would constitute success for them at this stage of the conflict.
Torbjørn, we know there are other considerations here too when it comes to the optics around foreign policy for the Americans. 3 Americans killed so far, and we know the Iranians actively targeting American military and facilities in the region. How do we think about this, given this is not what MAGA signed up for? MAGA wanted some form of a domestic policy, not more operations on foreign soil.
Yeah, again, this comes back to whether this conflict drags on or not. I mean, ideally, the US and Israel would have been looking for a kind of very, very swift resolution to this conflict. There's, of course, the possibility that at some point we could see a pause in hostilities between the US and Iran, and Israel and Iran, and that we could move towards some sort of negotiations to try and de-escalate. We certainly don't seem to be at that stage yet. What we heard most recently from the Iranian side was that they're not interested in negotiations. There may be, of course, kind of channels behind the scenes going on between the US and Iran. But so far, we're not seeing any indication of that. So the US and Israel, as things look like now, will have to brace for potentially an extended conflict. Again, we've heard President Trump talk about a 4 to 5 week operation. But Iran is a huge country with a huge population, very extensive security apparatus. So trying to untangle that and move towards some kind of interim solution is going to be extremely difficult. But those types of conversations are probably premature at this stage. For now, we're seeing that Iran is very much still able to retaliate, and that is a huge concern, especially for the countries on the other side of the Persian Gulf that have seen, as I mentioned, major hotel chains, commercial ports, international airports being targeted. So, the main priority now will be to make sure that Iran doesn't have this kind of capacity to launch drones and missiles. And then the next phase after that would then probably be to go after the state's repressive capacity.
Torbjørn Soltvedt, thank you so much for joining us. Principal Middle East analyst at Verisk Maplecroft.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Mobile World Congress kicks off in Barcelona today with tech companies showing off their latest wares, while AI and geopolitical disruption will no doubt dominate conversations. Arjun, I must say, a lot of bad luck for MWC. I mean, 4 years ago it was the war in Ukraine that started, now the situation in the Middle East. But consequences as we talk about inflation, supply chain disruptions, as we have this huge wave of AI adoption coming.
Yeah, absolutely, Karen. And all of these conversations are happening here at MWC. Certainly supply chain disruptions when we think about memory and whether this might exacerbate that as well. I want to pick up some of those conversations around AI, around AI infrastructure with Antonio Neri, the CEO of HPE. Antonio, I just want to first get your sense on the market. There's jitters in the market around the spending going into AI infrastructure, around some of the funding, the circular nature of this funding. How do you assess what's happening right now and some of these investor concerns?
Well, good morning. Thanks for having me. Well, obviously, we are living in interesting times, very dynamic times, but the AI build-outs continue unabated. We see it in the order demand. And I think what's going on now, enterprises are moving forward with larger deployments than just training the models. So what we see in our enterprise engagements is that the agentic AI is taking hold. And for us, that's important as a company because we provide solutions for both training and inferencing.
Just help us understand the market a little bit, Antonio, because we heard this last earnings season, the big hyperscalers saying we've got huge backlogs, we need to up our CapEx projections as well. You, of course, play in the enterprise, these government areas as well, and you said in the last quarter some of the projects had been sort of delayed somewhat. So just help us marry the two kind of things we're hearing together.
Well, our focus has been mostly on the enterprise segment, which obviously has taken a little bit longer to adopt AI into their business workflows. But the other aspect is sovereignty, and we believe sovereignty is going to be an important element of growth in the AI space. We are already the market leader when it comes down to supercomputing, so for us, deploying AI next to supercomputing is a natural next step. So I think what you see today is the acceleration of that, but obviously through the funding process and then ultimately to defining where to build these data centers takes a little bit longer. But we believe sovereign AI is going to be the next wave of growth.
Agentic in the enterprise, sovereign AI, what does the adoption curve of this look like this year? Because there's a lot of questions around how much AI is going to automate workflows. There was a big conversation, of course, around Anthropic's Cloud co-work. We also heard just a couple of days ago, Block laying off thousands of employees, directly attributing that to AI. And the CEO, Jack Dorsey, saying, well, he expects more firms to follow suit. So what actual impact do you think AI is going to have on the enterprise this year?
We believe AI is going to be an acceleration of business transformation across the enterprise segment of the market. We see it ourselves, right? So we deploy AI in our own business processes, whether it's finance, legal, HR, obviously services, but also in R&D, obviously using AI to do coding and to be more efficient. So we believe that's going to continue and it's going to be accelerated. The question is how you build the capability in the workforce to do more value-added work than just mundane tasks. And that's our focus right now, is continue to train and reskill the organization so we can add more value to our customers versus doing the back office that AI now can do through the agentic processes.
Do you agree with Jack Dorsey that organizations are going to have to make quite dramatic job cuts because of AI?
We don't see the job cuts as the driver of it. Obviously, I don't know his own company, but we see it more as an enabler for our workforce to do better work and deliver better experiences.
Antonio, talk to us about HPE's strategy in the data center and infrastructure, because there are some of your rivals who are going for speed market share grab very quickly. You've taken a slightly different approach, but when we look at the market, Dell shares have gone up a lot more than HPE's have in the same time period. So is the market rewarding that sort of land grab approach versus yours a bit more? And I guess, is yours more sustainable over the longer term?
Well, we're focused on sustainable, profitable growth, which ultimately we believe, the core of the next inflection point is going to be in networking. And that's why I pursued the Juniper Networks acquisition. And you will see in our stand here the amazing innovation we just brought to the market last week with a massive amount of networking for AI infrastructure, because as you build these large data centers, you have to connect them. And data center interconnect with optics is going to be the next big demand required to address these needs. And the second part of this is going to be obviously how you connect these large amount of GPUs and accelerated computing inside the data center. So HPE now has the ability to address all those needs with a world-class portfolio, which is the combination of Juniper Networks on the networking space, and then for the telecommunication to address the high demand on traffic, which obviously AI is going to drive. You also need the ability to accelerate, the pipelines with bandwidth that we have not imagined before, and that's where the combination of Juniper with our compute platforms, we actually are increasing the bandwidth 2x from what we were just 6 months ago. So we believe our routing products with the new platforms, the 12,000, 10,000, are the market leaders. And then with our compute, we also be able to drive that growth in the core of the telecommunications.
Like others playing in the infrastructure space, no doubt you're thinking very hard about supply chains at this point in time. We've seen the geopolitical flare up in the Middle East. Does that impact either AI adoption or some of this build out we're seeing at all in your view?
We have to see. Obviously, any disruption will have an impact of sorts, but right now what we see is the disruption mostly driven by the high demand and transition in technology nodes in the fabs that are causing, supply tightness in DRAM and NAND, and obviously inflationary costs. So we as a company, our first focus has been securing supply through a diversified supply chain network. Second is making sure we give customers alternatives in configurations through communications and demand shaping. And third is making sure we think ahead the next 3 to 5 years by securing long-term agreements with our suppliers. That has been the focus for us.
You mentioned NAND and DRAM, these memory chips. Any idea from your sort of insight as to when this might ease?
I think it's going to be a while. I think we see this going well into 2027.
Wow. Thank you so much for your time, Antonio. It was a pleasure to get that insight from you. Antonio Neri, the CEO of HPE. For now, guys, back to you in the studio.
Very nice work. Thank you very much indeed for that. Right, an industry source has confirmed to CNBC that Saudi Aramco's Ras Tanura refinery in the eastern province of Saudi Arabia has been hit by a drone and has been closed as a precautionary measure. Look, there are 2 points here, and we had this on both with Dan and our guest from Veris Maplecroft as well. One is what's going to happen with the Straits of Hormuz, which may or may not be temporarily very difficult for vehicles to get through, for ships to get through, or indeed maybe a longer term problem as well. Second point is whether there will be infrastructure hits, which will be longer term, both on the Iranian side and indeed on the Saudi side. Now, Ras Tanura is very important. It is the largest refinery in the Middle East and basically processes some in the region of 550,000 barrels a day of product as well. So very, very interesting that if we don't know what the damage is, at the moment we can assume it's limited, but if they are shutting it as a precautionary level, this is about the longer term picture. One, short-term blockages to the Straits of Hormuz or to oil exports from the region, that is one problem. But if you have longer-term infrastructure damage, that changes the dynamic over the longer term at the moment. And as you can see, the oil price just trading near its highs, up 9%.
It's hard to ascertain what's happened in Saudi Arabia. I think they've been more cautious about the attacks that they have suffered. They're trying to de-escalate tensions. But what we know from some of the other Gulf states is that 400 missiles, 1,000 drones over the weekend fired from Iran, intercepted by security forces in effectively 5 different countries. So very broad-based attacks. Jordan, the United Arab Emirates, Qatar, Kuwait, Bahrain. So there's certainly been a huge bombardment over the weekend. The question is whether, to your point, there are attacks that are suffered on key infrastructure from here and what that means for the oil price scenario. You've had all the discussions over the weekend as well around where we could end up. I mean, the worst one I heard was $120, which would be the absolute worst case scenario. That would be a trigger for a recession. Well,
they haven't got a clue.
But again, it is, and this was an oil insider, if there was the worst case scenario and you saw a huge, large-scale disruptions. But I think there's a de-escalation.
$120 there.
That's right. I mean, there's a 100 scenario, there's a 90 scenario. I mean, every step along the way, we see some sort of potential threat.
I get very, how can I put it? I'm amazed that people can put a number on it. 100, 120. They always seem to be round numbers as well, I've noticed. 100, 120, 150. They haven't got a clue. They haven't got. It all depends on the length of the shut-in as well. So when an oil expert says to me, and bear in mind, it's a market I've been covering since 1988, when an oil expert says to me, it's going to be $120, I would say to that oil expert, you really don't know what you're talking about because we just don't know what the ramifications are.
What I find quite interesting is the calculation I saw that for every sustained $10 a barrel increase, it will equate to 25 cents per gallon at the gas station. And of course, the midterms are coming up. Affordability is a big issue for Americans. And so that will, I'm sure, be weighing into considerations. An interesting theory that was posited in some reading I did over the weekend is the pattern we see where President Trump chooses to launch these military interventions on foreign soil at a weekend, on a Sunday, when the oil markets are closed. The theory being he does it so that traders don't get trigger happy and suddenly react, and we see a massive spike. They let the dust settle, and that's perhaps why we've seen a more muted response than some people had been talking about initially.
Don't forget the oil price matters because of the impact on global inflation. So if we are talking $100 a barrel, there were some estimates that adds 0.6 to 0.7 percentage points to global inflation. And this is an environment where we're hoping that inflation might be in the rearview mirror. If it's not, what does that mean for central bank actions? And don't forget this pressure of the Federal Reserve to lower interest rates under the incoming president.
Yeah, and on top of that, I think the print for producer price inflation in the US was higher than expected on Friday, which again fuels those inflation fears, especially if the oil price is sustained at that level.